Hey guys, I'm Steve, and welcome back to the channel where we talk about the joys of stock market investing, long-term dividend gaining. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. If you're a returning subscriber, welcome back. Guys, despite all the economic downturn and the things that are going on with the stock market, 3 of the past 4 days, the stock market has been running green, and a lot of people are going through a confusion because they don't understand why the market's green right now when we got some bad news last week. So, at present, the S&P 500 is at 1.39% at the time of this recording, and the Dow is at 1.32%, and the Nasdaq is at 1.23%. And I wanted to talk a little bit about it because a lot of people say, oh, a lot of people get caught up in these numbers, especially younger investors. You get caught up in these numbers, and you see them going in green, and the market's green in consecutive days. And a lot of people wonder if we're at the bottom of what's going on, and the answer is no. And the reason why the answer is no is because we still have inflation, and we still have just this whole situation with the Fed picking up interest rates, raising them, and things like that. So we're not out of this thing. But today I'm going to talk about a little bit of just plainly to you guys about some of the signs you'll know that we're coming out of this recession, and the situation with the interest rates, and we'll be entering back into the bull market. And it'll take time. It's not an overnight thing, guys. So some of the things I'll say today are some indicators you can look at, and they won't be next week or the week after. This will be over time, probably running in the next year or the year beyond. So it's a lot of time for you to get your portfolios ready, continue with your strategies, and continue to build wealth and get ready for the bull run. So without further ado, let me jump into it. The first thing you'll see, guys, honestly, is the short-term rates. The Fed, they'll stop raising rates. That'll be the first thing you see. They'll stop raising rates. And when they stop raising the interest rates, that's going to signify what? That we're starting to get a balance in the economy. To where we can start lowering, where we can start fighting inflation. Basically, the trench will be dug. That'd be the digging point. When they stop raising interest rates, that's when your ears will start going up. Okay, now we're starting to make a headwind in this thing. Now, just a little bit about it. At current, the interest rates, I think they're at 3.2%. They've been raised so much. Another thing is you got to pay attention. By December, the Fed is speculated at raising these interest rates like 4.4%. So we still got more rate hikes coming, guys. And that's something to be mindful about. So when you hear people talking about, oh, we're at the bottom, we are nowhere near the bottom. And these people deal with the economy all the time, and they have fail-safe measures to make sure everything stabilizes. So who am I or you to say we know more than they do? They talking about 4.6% in 2023 of raising interest rates. We already at 3.25. So that lets you know right there, guys, we got a long way to go. You got to understand something, how the reason why they raised these interest rates. They raised the interest rates to stop the economy and make the economy slow down. They want to slow down spending. They want to slow down, all of these other things, that it attributes to making inflation rise. And they do that with the only weapon they have, their main weapon, and that's raising interest rates. To stop people from buying cars and buying homes and things like that, and to slow down the economy to where it can stabilize itself. Higher rates equal economic slowdown. When they lower the rates, that means they're setting everything up to do economic growth. Now the economy will grow. Every time the economy is growing, always remember the interest rates are low. When they want an economic slowdown, they're raising the rates. So that's something to always be mindful of if you're really not familiar with the raising rates and what it's about. So that's the first thing. But that all ties into the second thing I want to tell you about. Second sign that, you know, all of this stuff will start clearing up will be when we get nearing the bottom, inflation start lowering. And when inflation start lowering, right, that mean what? The economy is starting to stabilize. And once the economy starts to stabilize, you know what I mean? You'll start to see a lot of other things. A couple of things I'm about to tell you about as far as when the inflation starts to lower. Now, when inflation starts to lower, this is when you don't look with your eyes. I mean, you don't look with your eyes. You don't depend on your vision. You depend on your hearing, or what you're hearing now. You'll start to see a lot of companies. They'll start to turn positive. You know, you'll start to see, you got to watch companies' actions. They might start hiring again. You know, they might start doing a lot of other stuff that they're reversing right now. Like they might start, like, you know, a lot of companies with the interest rates raising, it forces a lot of companies to do what? Stop expansion. Stop hiring people. Like, you know, FedEx and stuff, you know, they had bad earnings. So what are they doing? We're not going to have a Christmas rush where we hiring employees and stuff like that. Companies like that have these bad earnings and stuff like that, or these CEOs that are running around saying, you know, bleak things about the future, when they start to turn tail and start to speak about the market more positive and their company's direction more positive, you got to listen. And those are direct indicators that they know or have a general idea that the economy is starting to shape up amidst the two things I mentioned before. So that's one of the things. The second thing is when you hear everybody's sentiment about the market turning positive. Now, you know, you can listen on TV with talking heads and stuff, and everybody's, you know, coming on there. A lot of the great investors and hedge fund managers, they're saying, oh, well, I'm not buying anything right now, or I'm not convinced, or these few days are just a bear market rally. Don't get caught up in it. And some of it is useful information, you know, guys. So don't think I'm being dismissive. But once you see that these guys start to say, now's the time to invest in all of this type of stuff, and, you know, you as an investor, you're looking at your portfolio, you know, you're regularly looking at it, you know, and if your dollar cost averaging, you're definitely going to see this. You'll start to see a turn in the market, you know. So those are the four things that I think, this is just my opinion, you'll see when, and it'll let you know we're starting to be at the bottom, be close to the bottom or at the bottom of this, you know, because the four things that I just named, as in that order, they will become less and less relevant. You know, from 1 to 4, you know, they'll be less and less relevant moving forward in the market. You know, like with the Feds raising rates, the first thing they're starting to do will be the last thing you hear about. After a while on TV and like all these investment sites and stuff like that, you won't even hear about the interest rates no more. So when you stop hearing about the interest rates, okay, look, they got the formula. It's going to go down. The next thing you'll do is you won't hear about inflation no more. A lot of people doubt we in inflation. We're having inflation because they're going to be doing everything they do. You know, spending, and jobs are going to be hiring. And CEOs are going to be talking good. Oh, man, it's a great time to invest. And you're going to start seeing actions in the companies. The company's going to start blowing up. A lot of expanding. You know, a lot of things like that. And then finally, everybody's going to talk positive about the market. But see, the part when everybody starts to talk positive about the market will already be starting its descent, you know, out of the bear market. So, guys, I mean, it's just one of those things. But, I mean, I hope the video gave you a sense of, you know, what to look for in the future. And hope it was educational to you. If you could, do me a favor, hit that subscribe button. I try to give videos daily. My subscriber count has been going great, guys. You guys have been subscribing and showing your support. I'm glad you appreciate what I'm doing and what I'm talking about. And as always, hit the like button. Give me a comment. You know, tell me what you think about, you know, what are the signs when the market's gonna we're gonna come out of this bear market, you know, or when we're at the bottom of this thing. You know, I like to hear from you guys or what you guys think. But, you know, as always, man, like I say, comment, share, subscribe, hit the like button. I'll see you guys in the next video. Thanks a lot for spending time with me.